In this last lecture we are going to look at the myths behind cannabis, the future and finally, what you have all been waiting for, the investment opportunities. A few myth busters first. There are many myths floating around about the effects of marijuana use. Here are the main ones. You can't overdose on weed. You can, but it won't be fatal. Weed is not addictive. It is. The addictive potential of marijuana is linked to THC. It is a natural plant, so it can't be that bad. While it can't directly kill you, it isn't risk-free. Regular marijuana use has been shown to be associated with long-term problems, including poor academic performance, memory loss and lung cancer. To a developing brain, like those of teenagers, marijuana can be especially toxic. Marijuana use causes cancer. It's true that marijuana smoke, like tobacco smoke, contains carcinogens. But even hardcore pot smokers typically consume much less pot than tobacco smokers do cigarettes, probably not enough to cause cancer. Marijuana is a gateway drug. People who use marijuana are statistically more likely to go on to use other drugs, but that doesn't mean marijuana use causes use of other drugs. A report by the Institute of Medicine found no conclusive evidence that the drug effects of marijuana are causally linked to the subsequent abuse of other illicit drugs. Growing cannabis is easy money. It is true that the profit margins are extraordinarily high in the cannabis business. There is also a mismatch of demand and supply in most states with insufficient legal dispensaries to fulfill demand. But to counter this, there are many issues that make this a hard business to operate in, including high setup costs, regulation, security, specialist skills required to ensure a consistent quality crop and of course competition, not just from other legal operators but from the black market. Now let's explore the future of the marijuana market. The recent U.S. election saw 5 further states legalize marijuana in some shape or form. The potential, however, is all wrapped up in whether marijuana is legalized on a federal level. There is a possibility that the control of the Senate could swing to the Democrats as early as January 2021, and whilst legalization would not happen immediately, it would definitely increase its chances in the short to medium term and probably by the end of Biden's first term. The legalization of marijuana on a federal level is a game changer in so many ways. It would legitimize many of the U.S. operators, allowing them to make the most of their economies of scale and export across state lines and as significantly export to countries that allow medical marijuana. It will allow companies to access capital and drive expansion. Also, as we saw in Canada, it is likely that mainstream tobacco and liquor companies will make strategic acquisitions in the U.S. which they are prevented from doing now. Legalizing the industry will provide many opportunities, bearing in mind, however, that there are many a slip between cup and lip. There is one other major development apart from the legalization of marijuana on a federal level, and that is something called the Safe Banking Act, the Secure and Fair Enforcement Banking Act. This bill allows cannabis businesses to work freely with banks. This is currently a major obstacle for marijuana businesses as regards payment processing, access to working capital and other banking services. The House passed the bill back in May 2020 and it heads to the Senate, which has never passed cannabis banking legislation. It is unlikely, however, this bill will pass without the Democrats taking control, but there is a chance. Next, we are going to explore the potential investment opportunities available to the risk-taking investor. As of 2018, U.S. recreational and medical cannabis have penetrated just 8% and 21% of their estimated markets, respectively. Based on our state-by-state analysis, we forecast nearly 25% average annual growth for the U.S. recreational market and nearly 15% for the medical market through 2030. This is according to Morningstar. This is the opportunity, without federal legalization. With federal legalization, the opportunity becomes so much bigger. What we are going to explore in this next section is how as an investor we can benefit from this phenomenal growth. Cannabis-related companies fall into a number of categories including agriculture, retail, pharmaceuticals, biotechnology, healthcare, household products, cosmetics and even real estate trusts. Publicly traded stocks on major exchanges usually have at least 70% of their shares held by institutional investors. Because US-based cannabis companies are reliant on private sources of capital to fund their businesses, retail investors typically make up 91% of all cannabis stocks. This makes for a very volatile stock price. Generally, Canadian cannabis companies can list in the US and the Toronto Stock Exchange, TRX. US-based cannabis companies, however, have limited options. Exchanges in the US are out of bounds for them. Their options are restricted to the US over-the-counter market, i.e. matched bargain, or a listing on the smaller Canadian Stock Exchange. Investors wanting exposure to the US market should be targeting US-based companies, as their Canadian counterparts are unable to operate in the US. Although Canadian cannabis stocks do have potential with their ability to export to other markets, in our opinion the action is in the US. So how do we gain exposure to the US market? We can invest in a range of listed US stocks on the Canadian Stock Exchange or the US OTC, but we must remember these stocks are volatile and in the main illiquid, meaning to purchase a meaningful amount of stock the spreads are potentially substantially wider than quoted. Below are 4 US-based companies that are worth a closer look. Curaleaf, with the ticker Cura, a dispensary operator. Green Thumb Industries, with the ticker GTII, another dispensary operator. Trulieve Cannabis, with the ticker TRUL, focused on medical marijuana in Florida. Cresco Labs, with the ticker CRLBF, also another dispensary operator. The only problem is many of these stocks have increased in value by over 300% from their low point in 2020, thus already factoring in the good news in the market. However, an investor can look to buy on weakness and accumulate stock in these larger operators. Alternatively, search out smaller operators which are only just emerging. Although a higher risk strategy, you could add 1 or 2 of these smaller companies to a larger portfolio of US-based cannabis stocks to diversify company risk. Rather than conducting your own extensive research, you can buy an ETF, exchange-traded fund. There are a few of these to choose from, all offering different strategies and varying sizes. The 2 top ETFs in this space are ETF MG Alternative Harvest, with a market cap of $1.25 billion. This ETF has a holding of 50 stocks, with just 7 stocks representing 65% of their holdings. Much of the exposure, however, is in Canadian-based companies, with the exception of GW Pharma, a UK-based medical marijuana drug development company. Horizons Marijuana Life Sciences, with a market cap of $740 million. This ETF is mainly focused on the medical marijuana market. There are a number of other cannabis-focused ETFs, but these are much smaller, i.e. sub $50 million. And whilst many of these do focus on the US market, their small size means trading in them can be expensive. One of the better ones is Advisor Shares Pure Cannabis ETF. Its assets under management is around $62 million and is primarily focused on US and Canadian-based companies offering consumer products. Investing in cannabis stocks is probably the safest way to gain exposure to this market, although safe and cannabis does not go together. Some may say we are in a bubble right now with the recent massive increase in share prices. If you are a risk-taking investor, what other options are available to you? Crowdfunding. There are a number of specialist crowdfunding platforms that specialize in cannabis-based businesses. This is a high-risk, high-reward way of investing. One of your main considerations is to ensure that the valuation is not ridiculous. That is the sin of many of these platforms. In crowd-funded or private investments, it is imperative you conduct your own due diligence on the management team and the opportunity. Don't take the entrepreneur's word for it. However, there will undoubtedly be a few gems amongst the crap where you are able to invest at the ground level of a startup. But be very careful. Cryptocurrency. Believe it or not, there is an opportunity to buy cryptocurrencies that have exposure to the cannabis market. A few cryptocurrencies are looking to assist the cannabis market in overcoming its reliance on cash. A good cryptocurrency solution in this space is long overdue and could be very lucrative. An alternative investment strategy. The cannabis market can be broken down into plant-touching and ancillary. A wise investor may look to explore opportunities in the ancillary market, which isn't quite so hot as the cannabis-touching market. It is a foregone conclusion that if and when federal law changes, the competition will heat up to the point where there will be an oversupply. By selling picks and shovels, as in the days of the California gold rush, could be a good investment strategy in preparation for the arrival of the real green rush. I would like to spend a little bit of time highlighting the risks scammers pose in this market. We hope you all realize that wherever there are big opportunities, it is fertile ground for the scammer. That will take many forms, including overvalued or fictitious companies listed on crowdfunding sites, investment schemes offering above-average returns, limited time opportunities to invest in the next big thing. A popular ruse is, buy now before we are granted our license when the stock price is going to skyrocket. The problem is there is no license. Avoid the get-rich-quick schemes. So in conclusion, 2019 was the year of the bear in the marijuana market. Prices plummeted when it became obvious that stocks had been overbought on unrealized promises. Companies continued to make big losses and failed to realize the potential. The potential since the U.S. election is even bigger compared to 2018, which was before the market correction. Prices of listed cannabis stocks, however, have raced ahead in anticipation. In our opinion, they are due for a major correction. However, that assessment could all change if marijuana becomes legal at a federal level. The market will quickly overlook the problems at the micro level as it races ahead. The big question is, do you buy now or wait? It is never a good time to buy. It is always a good time to buy. We think that investors should consider buying exposure to the market now, but keep some powder dry to see how things play out in the next 6 months. And remember, only invest what you can afford to lose, because with this hugely volatile market, prices could easily halve if the market becomes nervous over slow progress or an unexpected sidewinder. Thank you for taking the time to listen to this course. We hope that you found it useful. See you soon.